Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. Welcome to this October 2024 update related to our Roth IRA conversion video series on YouTube. So the IRS just released the tax inflation adjustments for tax year 2025, and that means we have some updates to make inside of the personal tax planning template so we can continue to finalize our Roth conversion decisions for 2024. So update number 1 is the standard deduction, and here is the URL from where this information comes from. Right down here, for individuals filing separately for tax year 2025, the standard deduction is going to be $15,000, and for married couples filing jointly, the standard deduction is going to be $30,000. So we're going to go into the personal tax planning template and we're going to make these adjustments right here. Now the updates we need to make are on the Rate What If Scenarios tab, which we are using as part of our Roth IRA conversion planning related to possible expiration of the Tax Cuts and Jobs Act at the end of 2025. So here is our standard deduction section. There is the single filer section. We're going to update the 2025 amount to $15,000 as it said above. And then right here under married filing joint, we're going to update the amount to $30,000. Now we also need to adjust the extra standard deduction for folks 65 years old and older to the new inflation adjusted amounts of $2,000 per person if filing single and $1,600 per person if married filing joint. These amounts can be found in the details of the IRS revenue procedure on page 12, which can also be found in that URL shown earlier in the video. So it says right here, for taxable years beginning in 2025, the additional standard deduction for the aged, which means 65 or older, is $1,600, and the additional standard deduction amount is increased to $2,000 if the individual is unmarried and not a surviving spouse, which means single filing status. So back in the personal tax planning template, we are going to update that $1,600 per person right here for married filing joint, and then $2,000 right here if we are single filers. All right, update number 2 relates to our ordinary income tax brackets. And this little table right here comes from that same revenue procedure that I just showed you above. This particular table says for tax years beginning in 2025, married individuals filing joint returns, these are going to be the updated bracket thresholds right here. And so we're going to take these thresholds, 23,850, 96,950, 206, 700, and so on, and we're going to bring them right over here into the personal tax planning template. There is our 23,850, 96,950, 206, 700, and so on for tax year 2025. Now note that the equivalent update has been made within the personal tax planning template for single filing status as well. And remember that we now have the ability to toggle between married filing joint and single in order to assess the impact of widow's penalty on our Roth IRA conversion planning using the toggles shown above. And for those of you familiar with the template, you know that the filing status toggles are right here in this row. All right, next update number 3 is going to be related to our capital gain tax rates, and it says for taxable years beginning in 2025. Here are the rates on this line for married individuals filing a joint return, and then we have married filing separate right here and heads of household. So single filers are actually going to fall into this line right here, all other individuals. These are the thresholds right here at which long-term capital gain will be taxed at 0%. Then it will be 15% up to these thresholds here, and then anything beyond these numbers will be 20%. Now I also want to note that there is now a brand new dynamic capital gains tax rate table included inside of the personal tax planning template that allows for the rates to be indexed for inflation into the future, similar to how we've set up the ordinary income tax rates. and it also allows for toggling between married filing, joint and single filing status in order to view the impact of widow's penalty on our Roth conversion planning. All right, update number 4 is going to be a revised base case versus planning case Roth conversion optimizer section that allows you to compare the results between different Roth conversion strategies with an all-new breakout between income tax and IRMA. If you recall previously, we only had the tax plus IRMA section right here, so we could only see the results combined. But now we have it broken out between income tax and IRMA separately stated. So that way you can further refine and test your strategies and discover how small tweaks to your plan can add up to thousands or even tens of thousands of dollars or more, just depending on the size of the numbers that you're working with, over the decades between today and when you ultimately pass your remaining nest egg on to your posterity. In addition, there are also new training videos on the topics above, as well as some additional topics and members Q&A that have all been added to the personal tax planning template program in recent days. For folks who have been working on building out their Roth conversion planning strategies, you should have the following. 2023 should be finalized and in agreement with your 2023 as filed tax return. You should have a solid projection of your 2024 taxable income and projected tax. You should have a determination of how much room you have left in your marginal tax bracket for 2024 and a preliminary consideration of whether completing a Roth conversion in 2024 is looking right for you. You should also have laid out a reasonable projection of how much room you have in the brackets within your Roth conversion sweet spot between ages 59.5 and 73. And finally, you should have a reasonable estimate of what your RMDs will be looking like based on the current value of your traditional IRAs and estimated growth rates through age 73. Now, the 2024 presidential election is just 10 days away as of the making of this video. So the questions and considerations we should be thinking about strictly from a Roth conversion perspective are as follows. If one party controls the presidency and both houses of Congress, then major tax legislation going into effect for 2026 is certainly much more likely than if we have a mixed Congress. Will either or both of the candidates push for making the Tax Cuts and Jobs Act permanent? If yes, we can likely expect stability in the tax brackets, which would mean that your Roth conversion decision will be based more on the size of your projected RMDs versus 2, the current amount of room you have in the pre-RMD brackets versus future legislative events. Alternatively, if it becomes apparent that the Tax Cuts and Jobs Act will expire and not be extended or replaced, then it will be highly likely that Roth conversions in 2024 and 2025 will become quite desirable, as future law changes would result in RMD income being taxed at higher rates. Alternatively, if it becomes apparent that tax rates could decrease, which, by the way, in my opinion and based on general conversation I hear in the industry, is not widely expected regardless of which candidate ultimately wins the election, then we will have to look carefully at what the expectation is of future rates before finalizing any Roth conversion decisions for the current year. Regardless of the outcome, I will be here on the YouTube channel and we will continue to map out our most optimized tax planning strategies within the boundaries of whatever the tax law happens to be or can reasonably be expected to become. If you are interested in mapping out your Roth IRA conversion strategies, the personal tax planning template is available for purchase in the link in the description below this video. Also, make sure to check out my currently 8-part Roth IRA conversion video series on YouTube, where you can see the personal tax planning template in action. And there are links to that video series in the description below this video, or just search on YouTube for Number Crunch Nerds Roth IRA conversions. That's going to be it for this video. Thanks for watching, and I'll see you next time.